Welcome back. I'm Tony Damiano from eXp Realty. Today we are going beyond the surface to deliver a technical masterclass on the Tampa Bay and Central Florida investment markets. Investors are looking for one thing: durability. We're going to analyze the structural advantages that keep this market growing even when others stall. Our focus extends from the coastal hubs of St. Pete to the logistics centers of the I-4 corridor. These regions are creating a powerhouse economic engine. We'll start by analyzing the rent-first economy and why tenant profiles here are shifting toward high-income professionals. Then we'll look at new construction alpha, how builder incentives are creating immediate equity and cash flow opportunities. We'll also break down workforce housing, which I believe is the most underserved and resilient asset class in Florida today. Finally, we'll tackle technical risk management, focusing on insurance legislation and elevation-based flood risk strategies. The rent-first trend isn't just about affordability, it's a lifestyle choice for many of our newest residents. We are seeing an influx of lifestyle renters, professionals with six-figure incomes who prefer flexibility over traditional homeownership. This demographic includes traveling medical staff, remote tech workers, and logistics managers who keep our regional economy humming. These industries provide a stable, high-quality renter pool that significantly reduces vacancy risk for property owners. With some of the nation's top-ranked hospitals in Tampa and Orlando, the healthcare sector alone provides a massive anchor for rental demand. While cap rates have compressed nationally, Tampa's relative yield remains attractive compared to other high-growth coastal markets. When you factor in historical appreciation rates, the total return on investment here consistently outperforms national benchmarks. However, technical investors must understand Florida's property tax system, specifically how taxes reset upon a sale. You cannot budget based on the seller's current tax bill. You must project your own based on the purchase price and local millage rates. Professional property management is also a critical line item. Expect to budget between 8 and 10% of gross rents for high-quality service. In a competitive market, rapid response times and well-maintained properties are what retain those high-value lifestyle tenants. Now let's pivot to new construction. This is where we are seeing some of the most creative opportunities for investors right now. National builders are managing their inventory by offering incentives that the resale market simply cannot match. Rate buy-downs of 2 to 3% below market rates can save an investor hundreds of dollars every month in debt service. Smart investors look for early phase releases. Buying in phase 1 allows you to capture equity as the builder raises prices for later phases. By the time the community is finished, phase 1 buyers often see significant built-in equity without lifting a finger on renovations. The maintenance-free nature of new construction is another major technical advantage. You have virtually zero capex for the first few years. Builder warranties, typically covering 1 year for finish, 2 for systems, and 10 for structure, provide a massive safety net for your investment. Energy efficiency is the silent profit driver. Modern insulation and high-SEER AC units keep tenant utility costs low, making your property more desirable. Tenants in Florida are increasingly sensitive to cooling costs, and a new, efficient home is a major selling point in the rental market. We are also watching standing inventory, homes that are finished but unsold. Builders are often most aggressive with pricing on these assets at quarter end. If you can close quickly on a move-in ready home, you can often negotiate deeper discounts or additional closing cost credits. Moving to workforce housing. This is the bread and butter of a resilient portfolio, especially in a shifting economy. Workforce housing serves the people who keep our cities running: teachers, firefighters, administrative staff, and tradespeople. These renters are often more stable and long-term than luxury tenants, leading to lower turnover costs and more predictable income. The supply-demand imbalance in this segment is staggering. We simply aren't building enough homes priced for the average local worker. In many submarkets, vacancy rates for well-maintained workforce housing are consistently below 3%, giving owners significant pricing power. Local municipalities are starting to adapt by allowing higher density and accessory dwelling units to address this shortage. Investors who understand these zoning shifts can find value-add opportunities by increasing the utility and density of their existing assets. Workforce housing is often counter-cyclical. When the economy tightens, luxury renters move down into workforce housing, keeping demand high. This flight to quality and value makes these properties some of the safest places to park capital during periods of uncertainty. Now let's address the most technical part of Florida investing, insurance and flood risk management. Recent legislative reforms are finally starting to curb the litigation costs that drove insurance premiums sky high. We are seeing new carriers enter the market, which is the first step toward true premium stability for Florida homeowners. From a technical standpoint, you must understand elevation certificates. The difference of just 1 foot can save you thousands. Don't rely on FEMA maps alone. A modern elevation certificate provides the ground truth that insurers use to set your actual rates. Zone X is the gold standard for many investors because flood insurance is typically optional and very affordable. However, special flood hazard areas aren't deal breakers if the property is properly elevated and has a modern wind mitigation report. A wind mitigation inspection is the easiest way to lower your insurance. It looks at roof age, deck attachment, and opening protection. Features like hurricane straps and impact windows aren't just for safety, they are direct credits against your annual insurance premium. If you're doing renovations in a flood zone, you must understand the 50% rule. This limits improvements to half the building's value. Exceeding this limit can trigger a requirement to bring the entire structure up to current flood elevation codes, which can be cost prohibitive. Let's look ahead. The macroeconomic trends for Florida remain some of the strongest in the Western world. We are still seeing over 1,000 people per day moving to Florida, bringing massive amounts of wealth and human capital. Florida leads the nation in net wealth migration. This isn't just people, it's capital looking for yield in a business-friendly environment. Our industry mix is diversifying rapidly. Tampa and Orlando are no longer just tourism hubs. They are emerging tech and finance centers. The logistics sector along I-4 has become a massive employment driver, serving as the distribution spine for the entire Southeast. Billions of dollars are being poured into infrastructure, from highway expansions to the expansion of the Brightline high-speed rail. Enhanced connectivity between Tampa, Orlando, and South Florida is creating a mega region that will dominate the coming decade. The Florida lifestyle remains our greatest competitive advantage. People move here for the weather, the water, and the vibe. This sunshine premium ensures that demand for quality housing remains high, even when other markets feel the chill of an economic winter. In summary, the technical investor in Tampa Bay wins by focusing on durability, incentives, and technical risk management. Success here isn't about luck. It's about using data to make informed decisions in a high-velocity market. I'm here to be your strategic partner on the ground, providing the local insight that national headlines miss. Whether you're buying your first rental or expanding a multi-state portfolio, the Florida market has a place for you. Contact me, Tony Damiano at eXp Realty at 813-34-574-87 or visit tonino.damiano@exprealty.com. Let's work together to build your Florida legacy. I'm Tony Damiano, and I look forward to hearing from you. Thanks for joining this technical masterclass. We'll see you in the next one. Take care and happy investing. Before we go, here are a few quick takes on emerging submarkets to watch this year. Lakeland, Bradenton, and Port Charlotte are all seeing unique growth patterns that smart investors should be tracking. Stay informed, stay technical, and let's win together in the Florida market. Thank you for watching this technical masterclass. See you soon in the next session.